Okay, you were wondering why we were seeing nothing but red candles at the moment. It is crashing out there in the cryptocurrency market and things are looking dire. Are we heading into a bear market? I'd say not. Here's just an opinion from your average Joe investor, and I want to walk you why I think that we're probably not seeing the end of the bull run, but doesn't mean we shouldn't be a little cautious. So let's take a look at some data points and talk about it on a bit of a macro scale to see what's going on. Okay, before I actually do jump on over to the screen share and show you over on CoinMarketCap, where we can look at some of the charts there, what do I think is the fundamental thing actually going on here? This is what you're looking for. I believe that this is all based around some Federal Reserve, US Federal Reserve comments that were made in December that have had some posted minutes based on what were said there like in December sometime relating to tapering off their easing when it comes to the interest rates. They're actually going to start raising interest rates and overall have said that fundamentally risk is a little bit, we're going to come risk off, risk isn't on right now, which basically means that they're going to start to add more interest rates. Money's going to be harder to borrow, and across the entire, every asset class, money being harder to borrow means that people are less likely to want to take that free hand because it's not as cheap, and they're going to reassess their portfolios across the board in where all their money is. Being that cryptocurrencies are actually in the riskiest asset class that you could probably get for the standard investor. I mean, you know, you and I, we're in crypto all the time. That's actually the safest bet for us. We look at the stock market like it's crazy, but for the average investor, cryptocurrencies is one of those more speculative assets that's way over here where they allocate maybe a small portion of their fund or they're really just playing with because it's kind of crazy. So that's usually one of the first ones to actually get liquidated or readjusted when it comes to a portfolio adjustment, right? So most investors will tell you that you want to base your risk around not only your age bracket, but also you want to divvy it up slightly and kind of allocate different risk assessments based on how you're feeling, what you're doing in your life. Are you purchasing a house lately? What are the reasons that you would need to have different risk profiles? And you should analyze those and come across it. Now, when something like the Federal Reserve says, hey guys, we're going to start easing up on the money, we're not going to make it as easy to borrow now, it basically tells everyone who's over leveraged or anybody who's super leveraged, they're going to pull out, they're going to slow down what's going on. They're going to be like, well, I don't want any more expensive money. I want to see what's going to happen. And what it kind of does is it actually causes most people to jump based on just fear from knowing. It's like a catch, it's like a self-fulfilling prophecy, if you will. When they say it, the fear of it happening is so scary to most people that it could damage them, that by default, them pulling out everything causes the entire market to fulfill that prophecy that it is going to go down because everyone's getting scared. So it kind of eats its own head on the way down, which is unfortunate, but it is one of the natures of the beast. Something I would say to this, and there was actually a few kind of conversations going on out there, especially in Reddit, where they're talking about the fact that this could be a bit of a ploy from the Federal Reserve, or how this is a tactic that they actually employ to get the conversation started amongst people so that they do it themselves without them having to drastically change the interest rates, right? So they can approach it in a couple ways. They could basically just not tell anyone, and they could just set interest rates and let the whole thing kind of freak out and scream. They don't want to do that. But they realize that what power they have in what they say. So when they say something, they know the market's going to react without them doing anything. And so I've heard a few conversations out there, again, looking at the cryptocurrency subreddit, that they are saying this a little stronger than maybe they actually fulfill. They might actually not really realize as strong of a pullback or an increase in the rates that they're saying they are. Now, they are going to slow down the buying of debt that they've been out there purchasing, but it does, I would imagine that coming almost to a zero, and the printing coming to, I would imagine a zero, but we could be wrong. But I would definitely say that they're putting the word out there so that it gets the ball rolling and allows the market to kind of figure it out on its own, allow it to sort of slowly work itself out and bring it down to a normal place. The whole aim of this, honestly, is to combat inflation, right? Now, inflation is a huge portion of the Fed's policy when it comes to the Federal Reserve and how they dictate what they're going to say and what they're going to do. It's all about trying to mitigate, inflation, cause the economy to also be strong. Whether or not you believe that's actually a good thing they should be doing in the long run isn't matter. At the end of the day, it's still here to stay. It is something that the US government and most actual governments actually employ. I think all of them at this point. So you have to be cognizant of what's happening when it comes on that macro scale to look at these sort of things. And one, not get caught with your pants down, but two, also not get too worried about that situation. You're gonna be okay. You're gonna be okay when it comes to seeing those red candles, because as I've always said before, you have to keep it relative to where we've come from. So if you did happen to make some gains through the last year, then you're probably up significantly and this still hasn't hurt you quite what it could. But if you were holding your bags a little longer, this could be a bit of a bummer for you. It doesn't necessarily mean you're gonna lose all your money, and I don't think this is definitely the indicator that we're falling into that bear market. Although, when the Federal Reserve says some stuff, it has a huge weight, and this is a big point of this video, is that you need to understand what can be said and what market effectors out there exist. Federal Reserve and the US government are a big one of it. To continue with kind of giving you a safer feeling on it, I would say that I've heard a couple of comments made where it would talk about how we have elections coming up in the middle of the year, and they want to seem strong here now to bring it down because they don't want high inflation while a certain political party is in power to be a big conversation point. They want to show that they've actually done the work they have and brought it down, right? So if they do the work now, kind of scare everybody, bring it down a little bit, then they can ease up a little bit as we come into those elections. Which I thought was a very good point. I hadn't thought of it that way, but they're playing a different game in that political world up there that we can't even really relate to, honestly. So what they're doing or not, whether it's a conspiracy theory or not, it's still possible, and you have to think about those sort of things. But again, for the average investor, the average Joe, just like you and I, who are buying some coins, holding it, either doing occasional shorter trades, trying to make some quick bucks, we need to be aware of when those happen. And this is when you'll quite often see big dips in the market at times when the Fed's going to speak. Because if he's saying some stuff, Jerome Powell right now, if he's saying stuff right now, in the meeting, you can even see the markets affected during the meeting based on what he said, because people will quite often not like what he's saying. If they do like what he's saying, it will continue to go up. So there's a whole speculation, day trading, speculative sort of tactic that you can get involved with in that sort of capacity. I don't play with that. I'm a long-term investor. I like to hold my money and know that I'm going to probably make the next big chunk in the next four-year halving cycle, 3-4 years from now. But still, these are important things to look at. Let's take a look. Let's jump over here to the screen and just take a look at what the actual market looks like and see what we're seeing. So I've zoomed on in here already to Bitcoin. Let me back out for a second and let's look at the asset class as a whole. And as you can see, I'm just going to drag this scroll bar here. We've got nothing but red across the board. I mean, obviously we got stablecoin there that's in the green. Chainlink is an interesting one I was looking at. Which hasn't done much all year, but is actually surprisingly green with a nice upward trajectory there, which is great. But we see some of these other interesting ones also doing okay in the last day or two. Near here, Cosmos. I mean, this is obviously the days, the greens. What else we got? Phantom. These are all kind of ones that have been talked about pretty hot right now. They're pretty, got some good legs on them and a lot of good community backing and some good Twitter conversations going. So that's an interesting thing to see, that there are some stuff that are doing okay in this and maybe even combating the FUD that's going on out there. But if we click on our big boy, Mr. Bitcoin here, we can see coming back to it, 7-day, look, this is where we've had. So this basically started a couple days ago. What are we at? We are the 7th. So yeah, 2 days ago is really once it took off. I'm not exactly sure if it was the meeting minutes that came out that sort of illuminated this for everybody, but there obviously was one moment where something happened specifically. Again, I'm not 100% sure where the information stemmed from, but I do know it was generally related to, again, Jay Powell's discussions on tapering the Fed, just bringing back interest rates, making it a little harder for banks to make money. And we can see a similar sort of reaction happening in the overall stock market, period, right? So if we head on over to another stock market indicator, I mean, I think I could go, let's take a look at, here's a quick zoom. I know my camera face here is on basically S&P 500, which is a good indicator of the economy, right? Like kind of where the general stock market as a whole is doing. And this is a 5-day look at. So if we go back here, this is right here is about the drop off point where we saw on the Bitcoin chart previously. And so it's been doing the same sort of thing. So it's the assets as a whole. One thing I will speak to is I have a lot of friends who are realtors putting listings out the last 2 days, 15, 20 offers within like 5 hours. So Real estate market's still doing pretty hot, surprisingly, because the people I think who have already gotten as far as they have through a purchasing with a loan and whatnot are pretty much ready to go. So they're gonna still trickle through. But I think anybody else who's looking to get in might be a little scared. So that's a little side note there for you. But again, Bitcoin is definitely having a bit of a dip there, and there's nothing we can so much do about it. That was the general gist of what I see happening for the cryptocurrency market as a whole, why we're seeing it go down. But I'm here to tell you from my perspective why I think that that isn't necessarily something too scared to be. Are we going into a bear cycle right now? That's probably your next question. I would say from my perspective, no. Are you scared? Maybe. No, I'm not necessarily scared, but I'll tell you that I'm definitely keeping an eye on it, watching it, seeing what happens. But at the end of the day, the plan's still the same. You know, when it comes to investing as a retail investor, as a sort of person who has another job, a life, and things going on, which is what I always tell my friends and family, you don't want to get too deep into it and don't be checking it every minute and really worrying about it. It's about the long haul. And as we can see, that I like to put into perspective for us, let's bring this open and big so that we can get, let's go back to this. Let's put some real perspective on that. There's year to date, which because we're in 2022 is not a very good one. Let's look at the overall zoom. Let's take this, let's drag it in here to the last sort of year and change and see what we've had. Now, that is some volatility. That certainly is some volatility, but it still is all relative. We had a previous 50% drop. This isn't a good indicator where I can see, but here we go. What are we down here? We're down here at 30,000, which was our last from 60. That's a 50% drop, right? We've done a similar 50% drop here right now, but we've already experienced one. And can we do this all the time? I wouldn't necessarily say we can, but I like to always put it in perspective, again, go macro scale on the whole thing, because if we're talking about macro economics that are affecting it, we should look at it macro to sort of put our mind at ease. And that really is one of the big parts of it, is that if we zoom out, we can look over the last year or two that we've really made some huge runs. And honestly, we can see that somewhere in the late 2020 here, we were at 10K. We're still at 40K, so that's a very nice increase. That's a 300% increase from where we were 2 years ago. So thinking about the game long-term holds, that's really where you need to be as a retail investor who doesn't have day trading status. If you were a day trader, you would have known about this or at least been prepared for this sort of attitude, right? You never necessarily know what's going to happen with the retail investors because there's all sorts of effects that happen. Again, macro scale sort of stuff, but if you're a trader, you're a little more ready for this. And it's like those memes you always see on Reddit where it's like the new investor on a roller coaster and they're like screaming, and then you've got like the Mr. Bean over here who's kind of like bored sitting on the right side just because they've seen the dips. 50% is nothing in crypto. This is really nothing. As long as we start to slow down and sit somewhere in this space, I think we're kind of okay. And as you can see, we actually have, I'm gonna use this, like, I'm gonna put it over here because that box keeps popping up. But you can kind of see that there's a point of resistance. Oh, actually, can we look at TradingView? Yeah, oh, cool, look at that, that's fantastic. I love TradingView. I don't know how to zoom out now that I've got it to this. Let's go to the day. Oh, there we go, okay. So right here, at this line, the crosshair where I have it, so starting from here and we go straight across to the right, we have significant resistance. You can see that's a point that has had to be sort of tested here, here, multiple times, again here. You know, we have a point of resistance here, which is something that we're coming up to that we should be aware of. And so that's sort of just this side of the 40,000, it looks like, is sort of where that's going to, if I look at this last one, the wick down here, which I would generally stick to the candle. So we're about 40,000, which is where we're kind of getting to. We're getting very close. Now we're looking at the Tether Bitcoin, which is equivalent to looking at USD versus Bitcoin, right? Because it's a stable coin. So there's a couple layers of resistance that we can start to see. Now, if we were to break this one, 30,000, then I would be concerned. Do I think we're going to break that? No, I don't think we're going to break that. That's a very strong point of resistance that if we do break it, then maybe I'll go cry in a corner somewhere. I don't know, maybe, but we'll have to wait till we get there. I think we have a little ways to go. Again, zooming out a little bit, let's put that macro into scale. Here's that last 20,000 bull run, right? That we experienced where everyone couldn't imagine it making it there. This was the last time it was in the news. Look at this, look what happened for years on that halving cycle, the 4-year halving cycle, and then we've got this peak. So really think about it in terms of how can you not worry about it too much. It's not necessarily something that has to be too, today is it, I'm gonna kill myself. You can't think about it that way. You have to really consider it like a long-term hold. And that's one of the biggest things that we really need to do. The other thing I wanted to kind of jump over to is check out a couple of like reputable sites for crypto news, CoinDesk and Cointelegraph, and really just sort of see what they're saying about it. And if you actually look, there's nobody really talking about the macro scale stuff that I was talking about. There is obviously looking at certain things like leveraging has been probably combined with the fact that some fear has been put out there in the general stock market. So what happens is that when you deleverage a position, basically if the market starts to crash and leveraged positions are too extended, it will start liquidating those positions. Now, that's a very good chance that happened to a lot, causing the pull to happen more drastically, to happen very fast over yesterday, right? So leveraging is a really big one that I wanted to point out that's kind of like on the front page here. That's a good point. And if we come over to Telegram, actually it had a good one starting off on the front page here. Kazakhstan is having a bit of an issue too, which I know, again, it's like you got to look at all these things happening at the same time, which is really a big effect to it. Would I say that that's the one gone to it? Again, we heard time again when China was going to pull out, do the ban on crypto and basically say, we're not going to have it and you got to get out of here. Even though that destroyed the hashing rate, it didn't really do much to the markets long term, right? It was a very small blip that we saw. So I would imagine this 13% dip in the hash rate, not really the thing that's doing it, but they combine on top of everything, right? Maybe a slower year coming out of December, people were a little scared of. So we start to see, a little bit of concern about the regulation we've got here from the US, whether they're going to crack down on stable coins. Those are another couple of things that start to come up. And I did see another article down here that was interesting. So this was again confirming sort of Bitcoin leverage 9 hours ago. This is an article kind of talking about Bitcoin leverage reaching new highs, which I think is something that you should definitely, understand that leveraged markets will cause volatility if they're to be liquidated. So if something spooks the market, it will go down. If the market goes up, it doesn't really have much of an effect on the up market, although there may be people jumping in and leveraging positions if they think it's on its boom up. But it is more about, actually finding and keeping aware of it. So I would take a couple of things in away from this video. So is it getting too wild? It certainly is a little scary. Has it got a little bit of protection at a certain point of resistance? We have two lines of resistance there. I think we have the 40K line, and then we have down below at the 30K line. Now, no, that's not what you want to hear, but those are a couple of points that you could probably sleep a little better thinking they're gonna push back, right? Then also think that there's a good chance that the federal government is really just using this as a tactic to slow it down instead of doing it all drastically at once, raising rates all at the same time. I think the effect of this will ease off over the next few months. Really, there's a lot of talk about people seeing the crypto market bull run continue through 2022. I'm here, fingers crossed, hoping it is going to be true. I do believe it to be true, again, with the lengthening Bitcoin cycle. So let's hold on to that fact as well and not necessarily get ready to dump our coins and jump off a building this minute. Keep your couple of points of news always available to you. I would be checking out if you're more of a retail investor and you want to look at some stuff like Yahoo, which also will keep you in together with the entire sort of like general US news and also the US stock market. But CoinDesk and Cointelegraph are really other two great sites to kind of give you some daily information, updating you based on that. And you really can't go wrong with cryptocurrency subreddit. Which is a great one that actually has a lot of interesting sort of conversations, and you could see general market sentiment through here because there's a lot of people in crypto who kind of come to Reddit to sort of communicate with each other, whether it be to meme, to ask real questions, to be silly. And so you can start to read through a lot of this and get a general market feeling for it. And it seems that there's a lot of people scared out there, but I would say that the people who know this and have been doing this long enough really don't think this is the end of the world. So I think I'll end that there. I would say, again, going back to, don't necessarily worry about it yet. We've seen 50% retracements before. We've seen them go down. I do think there is a chance for it to pull back up and still do another finish run. Speculation on the $100,000 Bitcoin by sometime this year. I still believe possible to happen because it's, again, a lot of things in cryptocurrency are like those self-fulfilling prophecies where they do fulfill if everyone thinks they're going to fulfill, sort of thing, right? It's almost like they want it to happen and then everyone's involved and they will make it happen. So remember, be smart with your money. This ain't anything of this is financial advice. This is all just a conversation. It's a financed opinion based on my own opinion and some educational content to hopefully, bring you a little bit of information at the end of the day. Stay woke, and I'll catch you in the next video.